When I turned 18, I thought getting my first car would be the hardest part of becoming independent. I saved up £4,000 for a decent used car, passed my test on the second attempt, and felt like I was finally adulting properly. Then I got my first insurance quote, £3,247 for a year. I literally thought it was a mistake. That insurance for young drivers could cost almost as much as my car seemed impossible, but it nearly derailed my entire financial plan and taught me harsh lessons about insurance costs that I wish someone had explained before I started this journey. Today, I'm going to break down exactly how insurance for young drivers works in the UK, why the costs are so astronomical, and most importantly, the strategies I discovered that could save young drivers thousands of pounds without compromising on essential coverage. Let's start with the reality check. Just how expensive is insurance for young drivers in the UK? The numbers are genuinely shocking, and understanding them is crucial for any young person planning their financial independence. According to the latest 2025 data, the average insurance premium for drivers aged 17-24 is £1,340, but that's just the average. If you've just turned 17, you're looking at around £2,877 annually, and I've seen real quotes reaching £3,000 or more. To put this in perspective for your financial planning, if you're 17 and looking at insurance for young drivers, you could be paying £240 per month just for insurance coverage. That's more than many people pay for rent in some parts of the UK. Why is insurance for young drivers so much more expensive than for older drivers? This comes down to pure statistical risk assessment, and understanding this is key to making smart insurance decisions. Drivers aged 17-24 only make up 7% of UK licence holders, but they're involved in a disproportionate number of accidents. Young drivers under 25 have a claim rate that's around 25% higher than drivers over 25. Here's the part that really impacts insurance costs. 1 in 5 accidents involving young adults comes with an injury claim. This means almost a third of all insurance claims are made by under 24s, despite them being such a small percentage of total drivers. Insurance companies are businesses, and they price their policies based on these statistical realities. For young drivers, this creates a frustrating cycle where you need experience to get cheaper insurance, but you need insurance to gain that experience. What factors specifically affect insurance costs for young drivers? Several key factors determine your premium, and understanding these can help with your financial planning. First is your age. Even within the young driver category, there are significant differences. 17-year-olds face the highest premiums, with costs typically decreasing each year until you hit 25. Your location makes a massive difference too. Young drivers in London or other major cities can expect to pay significantly more due to higher theft rates and accident frequencies. Your postcode alone can add or subtract hundreds from your annual premium. The car you choose is absolutely critical. Insurance for young drivers varies enormously based on vehicle choice. A 1.0-litre city car might cost £1,500 to insure, while a 1.6-litre sports car could push you over £4,000 annually. What are the biggest mistakes young drivers make when getting insurance? The biggest mistake I see is not shopping around properly. Many young drivers get one quote, panic at the price, and either accept it or give up on driving altogether. The reality is that different insurers have vastly different appetites for young driver risk, and the variation in quotes can be enormous. Another major mistake is lying or stretching the truth on applications. Some young drivers think they can save money by claiming they park in a garage when they park on the street, or by understating their annual mileage. This is insurance fraud, and if you need to make a claim, your policy could be invalidated, leaving you liable for thousands in costs. The third mistake is focusing only on the premium cost and ignoring the excess. A policy might seem cheaper because it has a £1,000 excess, but if you have an accident, you'll need to find that money before your insurance pays out. What legitimate strategies can young drivers use to reduce their insurance costs? There are several proven strategies that can significantly reduce insurance costs for young drivers without compromising on coverage. First, consider telematics or black box insurance. These policies monitor your driving through a device in your car or a smartphone app. If you drive safely, your premiums can reduce significantly. Some young drivers see savings of 20 to 30% with telematics policies. Adding an experienced named driver can sometimes reduce costs. This seems counterintuitive, but insurers view it as reducing risk if an experienced driver will also use the vehicle. However, make sure the young person is listed as the main driver if they'll be doing most of the driving. Otherwise, it's fronting, which is illegal. Consider the timing of your policy purchase. Insurance costs can vary by month, and buying your policy a few weeks before you need it rather than on the day can sometimes result in lower quotes. How important is the choice of car for young driver insurance costs? Your car choice is probably the single biggest factor you can control when it comes to insurance costs for young drivers. Insurance groups range from 1 to 50, with Group 1 being the cheapest to insure. Most cars suitable for young drivers fall into Groups 1, 10. Examples of cars that are typically cheaper for young drivers to insure include the Volkswagen Up, Ford Car Plus, Vauxhall Corsa, smaller engines, and Peugeot 108. These cars are in lower insurance groups because they have smaller engines, good safety ratings, and lower repair costs. Avoid anything with a large engine, sports car styling, or expensive brand badges. Even if you can afford the car itself, the insurance costs could make ownership financially unsustainable. What about different types of insurance policies? What should young drivers know? For young drivers, comprehensive coverage is usually the way to go, even though it costs more up front. This covers damage to your own vehicle, as well as third-party claims. Given the high accident rates among young drivers, having your own car covered can prevent financial disaster if something happens. Third-party fire and theft is cheaper, but it won't cover damage to your own vehicle in an accident. If your car is worth several £1,000s, this could leave you in a difficult financial position if you're at fault in an accident. Consider the payment method too. Paying annually instead of monthly typically saves money, though this requires having the full amount up front. Monthly payments often include interest charges that can add 10 to 20% to your total annual cost. How can young drivers build up a good insurance record for the future? Building a good insurance record is like building credit. It takes time, but pays dividends later. The most important thing is to avoid claims wherever possible. Even if you have comprehensive coverage, consider whether small claims are worth making if they'll affect your no-claims bonus. Your no-claims bonus is incredibly valuable. Each year without a claim typically reduces your premium for the following year. After 5 years, you could be looking at discounts of 60% or more compared to first-year premiums. Consider protecting your no-claims bonus once you've built up a few years. This costs extra, but means your discount won't be lost if you have to make a claim. What's the realistic timeline for insurance costs to become more reasonable? Here's the encouraging news for young drivers. Insurance costs do come down significantly with age and experience. Most insurers start viewing you as a lower risk around age 21, 22, with more significant reductions at 25. By your mid-20s, if you've maintained a clean driving record, your insurance costs should be much more manageable. Many drivers see their premiums halve between ages 18 and 25, assuming they don't make any claims. What's your honest advice for young people facing these high insurance costs? My honest advice is to view expensive insurance for young drivers as a temporary but necessary investment in your independence and future mobility. Yes, the costs are high, and yes, it can feel unfair, but the freedom and opportunities that come with having your own transport often justify the expense. Budget for it properly. Don't just factor in the car cost, MOT, and fuel. Most importantly, drive safely and build that no-claims bonus. The high costs you're paying now are an investment in much lower costs in the future, but only if you prove you're a safe driver. Every year without a claim is a year closer to reasonable insurance costs and true financial independence.